Hey, good morning, everybody. Welcome to Wednesday, September 9th. Hey, this short week, but we're getting a little bounce after yesterday's trouncing again in the markets, and looking forward to our conversation with Dave today as he joins us here in just a minute. Hey, take care. We are looking forward to our conversation today. Hold tight.
057 Island Light FM. Good morning. Hello. Buenos dias, y'all. It is 20 minutes before 9. 8:40 now. We check in with money and see how Wall Street is doing. Yesterday was, well, let's just say ugly. But this morning, so far anyway, it looks like we could be seeing some green. Let's go downtown to the offices of Statler Financial Services, where Phillip Statler is standing by. Phillip, we're coming through all right this morning?
Hey man, a little in and out. Hey, you there? A little in and out, but we're doing okay, I think.
We'll make it through one way or the other. You sound fine on our end. Talking about the market yesterday, it was like, oh my Lord, Armageddon happens. The Dow was off by, 632 points. NASDAQ down 465. Standard & Poor's off by 95. It sounded like Armageddon, but we were talking before we went on the air. It's always interesting. These days, one index hits the official 10% number for the correction, and all of a sudden, investors seem to say, oh, hey, happy days are here again. And NASDAQ managed to cross a 10% decrease inside of only a couple of days. That got them into correction territory, and all of a sudden, all the computer programs started saying, whoa, let's buy something, it looks like, right?
Well, I think that's a lot of it. I think that we saw some technical plays come in today overnight, starting to buy. And the thing's going to be, does it hold up all day today? Do we end up in the green? Because we've got some nice numbers right now coming off of 3 really disappointing days. So hopefully it's going to hang in there and stay tight as we end the day, hopefully in the green.
So far it looks pretty good, but you're throwing out the caveats that are, very, very wise. We've had mornings in which you and I have both looked at it and said it's going to be a pretty good day, and then something happens during the day. Everything turns crummy before the end of it. It's a relatively quiet week as far as government reports are concerned, at the very least for the early half of the week. And we're going to be trading based on company news and news that happens out there on the COVID-19 front. I was kind of intrigued by the fact I haven't seen any big moves off of the news that one of the big companies had to pull their tests for the vaccine for the COVID-19 to go back to the drawing board a little bit or a step or two and figure out why they were having some adverse reactions. So far, Wall Street isn't overreacting to that, are they?
No, they really aren't. And I saw that this morning on the newsreel. And I think it was I don't want to say isolated incident, but I think it was one case, maybe 2 cases and I think it was just one case that had an issue. And so they decided, just based on that one case, to slow everything down and to take some time and make sure that wasn't going to happen to other people, that it was really and truly just an isolated case.
And the investors are evidently watching it, but not at the same time overreacting to it, which is kind of uncharacteristic for Wall Street investors, isn't it?
Well, it is. And one of the other things, though, that I did kind of hear this morning is that, they still need more people in the trial. They don't have the trial fully implemented in terms of the number of people they need. And they're hoping by the end of this month, across all the different pharmaceutical companies, to have that in place so that they then are fully in trial with the right number of people.
Understood. I would imagine the administration is really cheering for that after Trump went out on the limb last week and saying he expected to have a vaccine out in October. That struck me as taking a bit of a chance, and this morning's news was not the best news for being able to make that promise happen.
No, I think that was very overly optimistic of the president, especially you got Fauci coming out and saying, yeah, there's just no way that we're going to have a vaccine by the election.
That kind of gets us to the point of saying, let's not careful about those promises, Mr. President. So to reset the table, we've got a NASDAQ actually in correction. The Standard & Poor's is 7% down from its peak from a week or two ago. The Dow is off 7% from its peak, but we always need to come up with the point and remind folks that the Dow hasn't actually recovered from being out of correction from back in February and March, because the Dow never really did get back up into record territory. But at the very least, the big stock indexes, the Standard & Poor's and the Dow, are both down 7% from the peak. So it's almost like starting over again. With the NASDAQ starting to provide a little bit of a bounce back, we kind of have ground zero now for all three of the indexes, and we'll see what happens as the day progresses. Anything on the horizon for the next 2 days of the week after today, government-wise, that might make us change our mind or change our direction? I really haven't looked at the calendar yet.
Well, the only thing, I mean, tomorrow, we're going to have a few things come out tomorrow. We obviously have initial claims come out. We're also going to have the producer price index, the PPI, comes out tomorrow. So we'll have those two things to talk about tomorrow. And then on Friday, we have the CPI, the consumer price index, will come out on Friday. That's really what we have left in this week as far as major economic news. On the company front, Dave, we do have some companies reporting today. We have HD Supply, which is one of the construction company, supply companies. They beat pretty good. I mean, they came in at 83 cents a share, 10 cents above estimates. Revenue was basically in line, and up about 1.8% this morning. We also have Tiffany's. Now, Tiffany's didn't report, but if you remember last year, we talked a lot about being bought out by another company, a French company, a luxury lines company. Well, that deal seems to not be going to happen. And so Tiffany's is trading down almost 10% this morning, Dave.
I would imagine their investors weren't happy after getting giddy about the notion of having a big premium price stock buyout.
Yeah, I agree. I think that's probably some of the issues there too. From that standpoint. Now I got a couple more that I think are important to talk about. Navistar, the truck manufacturer, they lost 37 cents a share, which was bigger than expected. They're only expected to lose 5 cents a share. And so again, some of the stay-at-home stuff is affecting their product line. They're down 4.5%. I've got two kind of popular names right now. One of them being Lululemon.
Lululemon.
They had a good Lululemon. I call them Lululemon all the time. It's like that's the way it looks like it should be said, Dave. Come on.
I was mostly just filling in the gap because you cut off for a second when you gave the name.
Gotcha. Okay. So they beat by almost 10 cents a share. Which was good. Their digital sales are up 155% from a year ago. However, they've predicted that their profit is going to decline by about 20% this quarter because they're spending more on marketing. And so that's causing them to trade down about 4% this morning. And the last one I have for you is Slack.
That one caught
Slack,
my eye originally, because it was one of those where I understand they beat, but they're getting creamed, huh?
That's right. They beat, but they're getting creamed. They broke even for the quarter, but they were expected to lose about 3 cents a share. They actually added 8,000 net new paying customers for the quarter. Revenue beat. Everything looks good when you look at their report. However, looking at the current quarter, they are saying that their billing rate is growing slower than in the previous quarter. And that one little verbiage, as much as I can tell, is causing the stock to drop about a little over 16% this morning.
Boy, they aren't being very charitable when you don't show fast enough growth in a quarter the way we're going, huh?
I mean, if growing, I would think that would be good, but evidently that's not what the traders are wanting to see, and so that's affecting their stock this morning.
Evidently. Resetting the table, it was red ink across the board yesterday, but the good news, if you can call bad news good news, is we actually hit correction level for one of the three major indexes, and that evidently was enough to keep people happy for at least a day. 45 minutes before we open, Phillip, how well are we doing early on?
Hey, we are still doing very well, Dave, at least compared to the last 3 days.
Yeah.
We've got the Dow up three quarters of a percent. We got the S&P 500 up 1%, and we got the NASDAQ 100 up 1.5%. So everything is looking good on that side of the table. Commodities are a little bit mixed. We got silver down 0.2. We got gold up 0.1, and then we got crude oil. It's really about where it was yesterday when you and I talked, but it's up 2.5% from where it closed yesterday evening.
Take a little bit of a recovery there. Overseas markets, China and Japan, Hong Kong, all kind of reacted to our crummy day yesterday. They closed solidly in the red early this morning. Europe is following our futures, and those markets are relatively optimistic this morning. Great Britain and Germany, both are up better than 1% midway through their trading day. The ups, the downs, the sideways, heavens to Betsy, if you're 5 years away from retirement, this has got to be a frightening experience if you don't know how much risk is in your retirement portfolio. How do I get a hold of you to find it, Phillip?
You're absolutely right, Dave. You know, we've seen a nice bounce back, and then we saw a little trail off. I hope people did take that opportunity to reallocate. If they didn't, now's a great time to get an x-ray of your current portfolio from an independent source. I see a lot of folks out there advertising, hey, let them take a second look at your portfolio. But the key is it an independent review from an independent financial advisor? That's what we are here at Statler Financial. Give us a call at 382-0037. Check out our website, statler.com, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday mornings on Highlands News Talk 730. I forgot to mention, we have Friday with Phillip, 11:30 this Friday. Go to our website under events and you can register there. I look forward to seeing you then.
All righty, and a reminder, Zoom can be done on just the telephone as well if someone wants to just sign in for the audio. Don't worry about not being able to figure out your tablet, right?
Absolutely, you're right. They can just catch the audio portion of it and get their questions answered.
Absolutely. Phillip, thank you so much. We'll catch you tomorrow, all right?
All right, thanks, Dave. I appreciate it.
Thank you. It's 105.7 Light FM and Statler Financial Services' own Phillip Statler.
Hey, everybody, I want to thank you for joining us. I hope that the audio and the video all came through okay. I know we had a few little herky-jerky moments there, but I'm glad you joined us today. I look forward to speaking to you again tomorrow. Please remember, we have Friday with Phillip this Friday. You can go to our website, statlerfinancial.com. Under the events tab, you can register there. I look forward to seeing you. It'll be a good time. Get your questions answered. Get caught up on what's happening in the marketplace. Tune in. I'll see you then. Take care. Have a great day.